Good morning, folks, and welcome to Swing Trading Today. Normally, we don't do a Friday edition, but when the markets are in turmoil, we certainly want to step up to the plate. So, what we're going to do this morning is take a look at the headlines and take a look as well at the economic data that is set to be released today. And it is the pimp Mac daddy of them all, which is non-farm payrolls. So this economy has been getting held in check for the most part with the comfort of knowing that, quote unquote, we have historically low unemployment. The underpinnings of the emotional, and I shouldn't say emotional, the underpinnings of the confidence in this economy are rooted in those jobs data, which I've claimed for quite some time. They're manipulated. And we're seeing a threat to those jobs numbers now. I don't know how, perhaps not this employment report, perhaps next, the weekly jobless claims next week. I don't know how we avoid seeing an increase in unemployment. The tourism business alone is getting hammered. And we saw an improvement this week in the ISM non-manufacturing numbers. Productivity still positive. Weekly jobless claims actually came in better than expected. Watch the jobs data today. It's going to be an important number, a really, really important number. Let's take a quick look at the headlines. We'll let people filter in here. Good old Greta's back. There's not much out there. One can only hope this happens, an overthrow of the Chinese Communist Party. I don't want to get involved with politics right now. Yeah, Jeff Gunlodge, I was watching this last night. Still very bullish on gold. One of the few people out there that I have respect for in the financial community. There's not much in terms of headlines. This market is just trading on fear. All right, the chart that I find most concerning this morning is a view of the U.S. dollar, which is just simply getting annihilated. Think about it. 2 weeks ago, this time, the Dixie was at 99.91. This morning, it is at 96.037. A huge move. And these will be 4-hour charts. Morning, Tommy. Morning, Trent. Trent. All right. Hey, we all have our own opinions. You know, we pretty much have a one-party rule here as well. We just call them different names. So, slowly melting down. Yeah, like stock market, and now immunity. Yeah, they're going to be printing a lot of money. We haven't seen anything yet. All right, so the dollar in free fall. This is going to keep a bid under the price of gold, which I can't believe hasn't surged a lot higher from where it is right now. I know this morning we finally broke out above the highs of the 24th. And we are at new multi-year highs on our way to new higher highs, all-time highs in US dollar terms. We're already there in euro terms. Swiss franc, last I looked, we were close to it. Good morning, Cherry. So gold ripping. We did add to our gold mining trade. And we did short China using the YANG. My thesis here for shorting China was that there's a lag for whatever reason, whether it be manipulation, whether it be denial. I don't know. I just couldn't figure it out. But I saw an opportunity to short China because the leveraged ETF putting you short of China YANG was not moving. It was doing a retest of weekly breakout. And I said, you know what? I have a good risk reward entry point here. I can't believe with China close that the YANG is not moving higher. And that was 3 days ago. And now you can see this morning, it's finally catching a bid. We'll see how it opens up, whether or not we hold these gains. So we are now profitable on this trade. We'll look to add when we hit a certain criteria. I'll be sending out an alert to members. And I believe the SMS we validated last night that the text messaging for alerts is now active. So good stuff there. Taking a look at stock market futures. All right, wow. So this is the Russell, this is the NASDAQ 100. We're rolling over. That's my developer. We're rolling over here. We've broken down below this support level. The question is right now, we don't want to be doom and gloomish here, right? We want to step back. We have no position long of the stock market. We want to step back and say, okay, do we put in a higher low or do we take out the lows of February? If we take out the lows of February, we are going considerably lower in this market. And we'll continue to trade what's been working. Short China, short the United States, long the gold miners, long silver. And that'll keep us healthy. And then we went over a series of charts we're watching last night on Thursday night stock market charts live, and we have a watch list that's growing. Some of them high yielders, and we'll look to buy those once they hit our price points. Not yet though. We're just at the beginning here of what I believe to be a bigger sell-off, and the yield on the 10-year is telling us that. And the inversion of the yield curve has stopped, and we are now steepening, and that does not bode well for the stock market. So watch for a break to new lower lows. You can see I have an alert set here if and when that does happen. I would not catch a falling knife here, folks. All right, the Russell 2000 is very, very close to taking out the lows of February. We're stone's throw away. I have another alert set here, letting me know when that happens. I would not hope that we hold the support level. The probability of us breaking is very high. Taking a look at where my S&Ps. So the S&Ps did take out the lows of the 3rd. Do we break the new lower lows? We still have a way to go. We're down 2.11% on the morning. I think the thing to remember here, folks, is that what makes this correction different than most any other is that we have fallen so far, so fast from all-time highs that fund managers haven't been able to rope-a-dope the market, meaning hold it a few rounds, rotate out, because they have big positions. They sell market orders. They're going to crush this market. So they're trying to get out with as much grace as possible. And it's difficult for them, given the size of their positions. And that's one of the benefits of being a small investor is that, you press a market order, you're not going to move the market. These guys will crush the market. So one of the downsides of being large. So the S&P 500 has taken out a prior low. We haven't made new monthly lows, but I think that will probably follow suit as the Russell 2000 is close to doing very soon, if not today, early next week. So we'll stay positioned as is for now. Let's take a look at bonds. We'll go with the 30-year. Jesus Christ. This is just overnight. Up 2.5% on the 30-year. Let's check out the 10-year. We did flirt with shorting the bond market. It looks as though we may get stopped out of that position this morning. This is the 10-year. One thing I will point out here, it's worth mentioning, is that as we press to new highs, RSI is making lower highs. We're losing momentum. So I may show a little bit of patience here on that trade. I wouldn't go adding. I wouldn't average down. But this is an indicator that we may be losing a little bit of momentum on the 10-year. All right, a quick stroll through, let's take a look at Bitcoin. We'll go through gold, go through oil, not gas. Bitcoin, so much for a store of value. Very disappointing. Normally we've done analysis on this, and normally Bitcoin will trade along with inflation. Now, right now, what you're seeing is, at least in travel, leisure, you're seeing deflation, right? You have demand that's been sapped out of the travel and leisure space, meaning the Chinese, huge tourists. You have vacancies in Vietnam, neighboring countries, down 30-40% simply because the Chinese uh, consumer is staying at home. The United States is certainly getting hit by the Chinese consumer staying home. So to think that we don't have deflation in the travel and leisure space would be silly. But we're seeing it to a certain extent in energy. The problem is that while in the short term, let's go to light sweet crude. In the short term, we may be seeing deflation, but the Federal Reserve is sowing the seeds for inflation. My wife went to Target yesterday. Clorox bleach, all the bleach, off the shelf. A lot of food goods off the shelf. So what does that mean? If you have factories that aren't producing as much, you don't have stores stocking up as much, yet the Federal Reserve is making money cheaper, that sows the seeds for inflation. So short term, I've been saying this for a couple of weeks now, short term, I'm expecting deflation. Longer term, they are sowing the seeds for inflation. And you're seeing it realized in the tip market. Let's bring up the tips. Here are the tips. Treasury inflation protected securities. Let's take a look at gold. Again, I think we already went over gold. It's still a bit early. I'm only on my first cup of coffee. These are the futures. Inverted head and shoulders setup. We spoke about this the other day. It is certainly broken out. Left shoulder, head, right shoulder, neckline. We've cleared. The April futures aren't showing that we've made new highs. Strange. I could have sworn we were at new highs earlier. Let's go to take a look at that. A little bit of a divergence there. All right, so this is the April futures contract. Not at a new high. All right, so that's accurate. All right, we have not made a new high. Okay, I stand corrected. Pre-market, let's check out our gold mining position. We are catching a bid here. We're up about $1 in the pre-market. We're watching Vietnam. Vietnam is probably going to get crushed here. But what we're doing now is that we're looking for the beneficiaries, folks. We're trying to see through. This is our contrarian model. We're trying to see through this very dark phase of this sell-off and trying to see who will benefit and who is getting crushed inordinately, and is there an opportunity there. Vietnam, I think, is going to be a beneficiary longer term. Short term, they're getting crushed due to travel and tourism, lack of commerce with mainland China. That's short term. Longer term, Vietnam is going to be a beneficiary of industry moving out of China and into neighboring countries. So Vietnam, very interesting. We are watching. Let's bring up Carnival Cruise Lines. We have a price target. We discussed this last night. Still not at our buy point yet. We have a way to go here. Right now at current, assuming that the yield is safe, it's yielding over 7%. It's not at a support level yet, but we're watching it. At some point in time, people would begin to take cruises and you'll see a recovery. And you'll be wishing that you had been looking at these names when nobody else wanted them. So over the weekend, I'll be putting together our best stock charts for non-members. For members, I'll be putting together the week ahead commentary where we do an analysis of the health of the overall market, how we closed out the week, and where I think the markets are going for the coming week. What are we looking at in terms of potential trades? And we will look to put those trades on when the share prices come to us. We will not chase these share prices. We're not going to buy and hope that the shares recover. We want to buy at a price of our choosing. This is becoming a buyer's market, and we need to be prepared. We need to have cash on the sidelines. There are going to be great values out there. Another name that did very well yesterday, excuse me, my voice is going yet again, FireEye. Really good price action yesterday. I love the monthly chart. We're up again this morning. So this is bucking the market. I'll talk about the monthly chart over the weekend. It's looking very, very good. So more to come here on FireEye. Let's take a look at Nat Gas. We'll leave off with that. I know this is one of the favorites. Sorry about the dead air, folks. I should have had this ready. I thought I did have it ready. I'll put on some music for you. Do-do-do-do. Do-do-do. All right. Let's see how my memory is here. There we go. Not too bad. Okay. Not bad. We're down 1.25%, but we appear to be attempting to put in a higher low here. I wouldn't go buying. So this is just the time to watch, wait, have that cash on the sidelines. Good morning, Spear Gold. I'm seeing some currency comments here. So let's take a look at euro and yen. What's separated us from the Europeans and the Japanese, meaning negative rates, appears to be diminishing quickly. Gunlatch yesterday applauded Fed Chair Powell for not condoning negative rates, but we're coming pretty darn close. He doesn't think that the Fed's going to go negative on yields. I hope he's right. I'll defer to Jeff Gunlatch. Who am I to question him? But yeah, take a look at this. Jesus, Mary and Joseph. And when you think about, this is the euro. You think about this is an economic zone that has just gone through a breakup of one of their key members, yet their currency is now ripping through the ceiling versus the US dollar. If you take a look at it on a weekly basis, we are clearing weekly resistance. I would expect a pullback and a retest in the coming weeks of this breakout point. But in the short term, the wind is at the back of the euro. That means weakness for the dollar. That means a bid for gold, silver, anything denominated in US dollars is going to, if it's falling right now, is going to fall less worse than it would were the dollar rallying. Those that are rallying are going to are going to rally stronger because the dollar is weakening. The yen ripping this morning. Wow. Amazing. Really amazing. So this is a 4-hour chart on a tear here. Let's take a look at the weekly chart as we did with the euro. And this does not bode well for the Europeans and the Japanese. They are huge manufacturers. And this is going to make their goods more expensive. And I mentioned earlier that you're going to see inflation. We import way too much in the United States. Way too much. We do not produce enough here. And this is going to make the cost of goods produced in Japan and in the Eurozone a lot more expensive here in the United States. This is a major breakout. Looking at some comments. We have price targets. Prediction gold. Tommy, prediction gold, 1,700 tonight. Spear gold, what are you recommending to buy for today? I am new here. So when you're talking in terms of buying, you need to we have to break things into camps, right? So if we're talking about buying, are we talking about a continuation move higher, or are we talking about value? Are we seeing stocks that have been sold off and are right to be picked off for value plays? I don't have anything yet that I'm confident enough it's going to withstand the sell-off in the stock market. I think that what we've seen is a counter-trend rally in this market, and that we would probably roll over. And I think that frankly, in the coming days, we're going to break down to new monthly lows. So I'm not seeing value yet. I've talked about a couple of stocks, CCL, Carnival Cruise Lines, that have been taken to the woodshed. They pay big fat dividends, assuming that they're safe. And those are companies that I would be looking to take and buy and begin to accumulate at certain price points. And I'll send out alerts to members and throw in my 401k plan or IRA and just sit, watch, and wait, because people are going to be chasing yield with treasuries yielding nothing. And in essence, they're just going to be a place to store cash to keep it safe. In the future, these dividend paying stocks are going to become more and more important to fund managers. So longer term, we're looking to buy high yielding stocks, but I'm not ready to pull the trigger yet. Shorter term, in terms of what we're looking to add, we're looking to add more to our short of China, because I think there's a tremendous amount of apathy with regard to the damage that's being done to that economy. And I don't think that people are appreciating the fact that the longer term picture for China, this is the YANG. I went over this earlier. We continue to move higher here. Now we're at $47 per share, up nearly $3 in the pre-market. I don't think that people are appreciating the fact that China is closed for business and people are going to move their businesses out of China. Not everyone, but segments. We are way too overly concentrated as a global community in China. That is going to change. It was changing, and it's going to change at a far more dramatic pace. It's like having all of your money in one stock. What if that company craters? That's the analogy I'll draw. The stock, being China, has cratered, and it's taking the rest of the global community down with it. It's closed for business. And I can't believe we're not seeing this short ETF up a lot higher. So we're looking to add more here. We're looking to buy Vietnam. Not yet. Not enough damage has been done here. So we have a short list that's building, but we're not ready to pull the trigger to buy and hold yet. I would love to. We're not there yet. More damage to come. Tommy, Japanese stock will plunge more. No doubt about it. They're manufacturers. They rely upon exports. If you have the United States that slows down along with China, It's bad. It's very, very bad. You said last week the stock market may hit all-time highs. Let's clarify something. And this is, I guess that's a mock. That's from Daniel's Mungo. Uh, I said that the stock market may hit all-time highs if the Federal Reserve is able to manipulate the markets up higher in advance of the election. I didn't say I was right. And we were preparing, and you can go back to any one of my videos going back over a year now, saying, get ready for the sell-off. And when this coronavirus first hit, I was saying, this market has got it wrong. And that's a bold-ass statement. The market was in denial, and we were buying the gold stocks. We were positioning for this sell-off. We didn't own a single stock. So we called this and nailed it dead. So to come on and say that, I guess it's a mock, that we got it wrong, you better go back and check my videos, pal. Because we nailed it right on the head. When all these pontificators on CNBC were still cheerleading this market up higher. So I put myself out there every single morning. So I would strongly suggest you go back and take a look at what I had to say, because I've deleted no videos. They're all up there. Go take a look and then come back and say whether or not I got it wrong or right. Let me move on. Taking a look at food prices. Soybeans, which I mentioned yesterday, as catching a bid. They're pulling back a little bit here. That's a good sign. Wheat, which was pulling back, continues to weaken up here. So it's good to see that we're not seeing a ton of inflation at the food level. Corn is catching a bid. It did pull back. And we are consolidating here. Watch for a move up higher in corn. Not a big, from what I understand, not a big food good over in China, but certainly here in the United States, it is. All right, let's circle back through the stock market futures really quick, and I'm going to sign off. Oh, let's take a look at the Swiss franc really quick. It is on a tear. This is the only other currency other than the US dollar that we have not seen gold hit all-time highs against. Let's take a look. S&Ps, are we strengthening? Are we weakening? We're weakening up here, folks. So, you know, I can't give financial advice. But we're now down below the 3,000 mark on the S&Ps. We're looking at a 28 mark on the S&Ps before all is said and done. If that breaks, I would strongly urge, don't go catching a falling knife here, because there's a lot of hot air underneath where we're trading right now. We can go a lot lower. We trade down below 28. You're going to see the algos go crazy. I'm going to set up an alert here. Okay, the Russell 2000, it broke. That was the alert that went off a little while ago, a few minutes ago. It broke. All right, so we have new monthly sequential lows on the Russell 2000. We're down nearly 2.5% at current. Where are my NASDAQ? So we'll go with the NASDAQ 100. Yeah, we continue to weaken up here. We're down 2.8%. All right, here's a weekly view. Let's talk high level stuff here, because I don't want people to lose money. I don't care if you're a member or not a member. It's human decency. If we take out, let's go to the S&Ps and do this, because the S&Ps are far more of a familiar number to everyone else. So let's use that. All right, so if we take out the lows of last week, which was 2850, we're coming down here. I think that will blow right through this higher low from this low, and we're coming down to 2774 in a heartbeat. If we break that support level, we're coming down here to 2778. So we'll watch for a defense here of 2850 to 2800. But at current, it's not looking good. So for those thinking about buying the market this morning, the best way to play a market like this is wait for a higher low. We don't have a lower low yet. Wait for that higher low. If we get it, that doesn't necessarily mean you go buying the market. But if you wait until you break out to a new higher high, while you're paying more for the more of an average per share, your risk is considerably less because your probability of making money, because you have put in a higher low and a higher high, that means you have buyers of like mind trading along with you. You're not fighting the market, you're trading along with it. So you're paying a premium. So I would wait at current to see whether or not these support levels hold. And then at some point in time, wait for that higher low and then a higher high. I frankly don't think that these support levels that we're seeing in front of us right now are going to hold, not given this type of price action and the dramatic slowdown that we're seeing in this economy. At some point in time, they're going to have to come out with a fiscal package out of Washington. The Federal Reserve can only do so much. They can finance that fiscal package, but they're going to only be able to do so much. You're going to need to see tax cuts, middle class tax cuts. You're going to need to see guarantees for business loans, etc., to ensure that the consumer remains confident. Because once they lose confidence, the consumer is 70% of the U.S. economy. Let's check out gold, and I'm going to shut down with gold. We'll make this the last chart. Thank you for the amen, Bonnie. Gold, no new high yet, all-time, no, excuse me, scratch that. No new multi-year high. We're still a couple $100 away from an all-time high, a few dollars away from a multi-year high being at 1691.7. At current, we are at 1686.3. And we could break this multi-year high today easily. So if you're looking for places to park your cash and you don't want to keep it in treasuries or in US dollars, look towards the miners, look towards gold, look towards silver. Silver hasn't really caught a bid as much as gold has yet. Those are the areas where I would be where we are looking, where we have been looking. So we're already positioned. So with that, folks, everybody, please don't catch a falling knife. Get your short list ready. There are going to be great opportunities that hit this market fairly soon, but I would not go catching a falling knife right now. Let's wait for that sell-off, that washout. Then we'll watch for a higher low, and then we'll begin to nibble on this market and then get aggressively long on a new higher high. We're not there yet in terms of buying stocks. So everybody have a great weekend. Please join me. If you're not a member, join us on Best Stock Charts for the coming week. If you are a member, I will speak with you on the week ahead commentary. And of course, we'll be doing Sunday Night Futures Live. There's a link below, or there will be a link below, where you'll be able to enter your email address and you get a 15-minute alert on Sunday evening before we go live. And so please join us there. Everybody have a great weekend again and be well.